Good afternoon, all. CamelbackTrading.org coming to you this Wednesday afternoon, October 14th. We're looking at the last couple of days of the SPY ETS market profile, and we come out of an inside day to the downside. This is the one day. The previous 2 days I would have probably broke even Monday, made small yesterday, but today would have been a really good day to trade. So absolutely very frustrating that my account's still not open. It is in the process. I'm going to Tastyworks. I have the money being transferred over. I am hoping that Monday will be the day I get back to live trading. But this would have been a very frustrating day. It was a frustrating day not being able to trade because I would have had an excellent day. We started trading with a lot of lack of conviction either way. We went back and forth through the opening 4 times. Did make the comment in the room that we 2 times barely got above the opening in C and D. But each new low kept coming back into the day's range. Even E period, when we first took out C's low, didn't really get acceleration yet. But you could sense that this market wanted to finally puke and at least test yesterday's low. And obviously you would have taken out Monday's low then and then see what happens in the gap. And they finally did it, finally got the tempo, finally got the volume, and it would have been an excellent short in E and F. And the biggest thing in the room was kept telling people when that did happen, stop. The fade game is over for now. Do not try to catch this. Either be short or stay out of the way until we get two-sided trade. And the majority of the room did that. They either stayed out of trouble or got on board the short. I certainly would have been on board the short and would have hit a really nice home run or touchdown in E and F. Well, both in E and F period. So let's go over what I would have done today. So first off, we filled the weekly gap, but we're still one time framing up in the weekly. That's very important. We're still one time framing up for 3 weeks. We're in balance in the daily. I said this is healthy, and I think it is very healthy. The one thing I saw, and again, the volume was crap today, only 51 million. We're averaging 73 million. So we did 73 million yesterday on an inside day. With the after hours, we're not going to even do that today. So this is all just short-term traders, longs from Monday and Tuesday, that once we took out Monday and Tuesday's low, got out, and the shorts piled on. That's all this is. It's healthy for the market. Russell, the IWM did have an outside day down. So that's a little more bearish for them. But for us overall, and even the triple Qs, here's the Qs. They didn't even hold the single prints. They only ended 8 wide, but look, that's a B shape. So that's long liquidation. Same thing in the triple Qs. Weak longs getting out once they took out yesterday's low out of the inside day. And shorts piling on. That's all it is. So as far as the trades I would have taken today, actually in A period, once we got above the opening, I said, let's see what we do in trading M-wise. If we take out, and because I said M's important, we got a little close to M's low, but got above the open. I said, good chance we trade M's high. Well, I would have taken a 350 call, and guess what? We traded M's high. Then I said I would have taken a short at the afternoon rally high and against D&E's high. So right after that long, I would have gone short the 353 puts, which basically was both expirations today. Now, we did go higher, and when it came in, I basically took them off for break even. But nothing really told me to take them off, and I should have held them, right? We never took out A's high. But whatever, I told you, I'm trying to be as honest as possible with my real trading and my paper trading, so I would have taken them off even. Now, wouldn't have done anything in B. B took out A's low, still wouldn't have done anything. C period, I would have taken a short. I did take I would have taken a short. The 352 puts, once we took out B's low, I would have made on that. Also would have taken another one after, because I was looking to see what we did once we took out B's low, and I would have made something, not a lot, but it would have been profitable. It was below the opening, and then once we took out B's low, then I took another one that I probably would have broke even on because I wanted to see if we held the opening again, and that didn't happen. So I would have broke even on 2 trades so far. I would have made on a long in A, a short on a C. Then the big trade happens. E period takes out C's low. I didn't get on right away. Did not get on right away. We didn't have the tempo yet. Remember, we made new lows in B and C and came back in. We were 4 for 4 wide. But you could sense something changing. What changed? Well, we couldn't get back to A's low to make it 5 for 5 wide. That's a little nuance right there. Obviously couldn't get back to the opening if we couldn't get back to A's low. So once E kept stopped hanging around and then started going, I knew Monday and Tuesday's lows were going to go. I would have gotten on board the 350 puts and start riding it down. Now, would I have held it the whole time? No, would have been taking it off because it was inside the gap and it's a weekly gap. So there's something visual in there. But once F period opened and went back up, and I said to the room, well, I'm going to short this again. Would have had a nice trade in E, started it again in F, and I said would have added up to K's low. Why? Because that's where change took place. That's where the inside day down happened. So I thought sellers would defend it. So I said in the room it was 350 puts against the singles. I would have bought 25, 50 at K's low, and then boom, it reversed again, went down. That was basically my touchdown trade. That would have been a very, very nice trade. Now, what else did I do? Well, would have done. H. We finally got some two-sided trade in E, F, and G. So when H took out G's high, I'm like, well, maybe we get an afternoon rally high up to around F, somewhere around there, and I take it off. Took a 347 call play, didn't get a lot, didn't get what I expected, still made money on it. I would have took them off. And then I had another very nice trade that started in L. When L took out K's high, I said I would start shorting this around J's high, which I did. Took some heat, added to it. I thought we still would get back down to 9 wide, either in L or M. Well, L, I took some heat. I would have been long 100 puts. A good part of it up here. Rolled it back down. Would have made a nice trade on that. And I actually could have taken puts again in M numerous times to scalp them until we finally got to 9 wide. That's not 10 wide. Oh, it's N, that's why. But we ended 9 wide. So this would have been a very good day. So this one is incredibly frustrating that I couldn't trade it today. Okay. Destinations. Again, this is why we trade every day. I'm not going to cry because I didn't trade, but I certainly would have had a good day today. The algos were very, very readable, and they made for a very delightful day to trade, quite simply. Okay. Upside destinations. We have a double distribution day. So all we have today is the high, the low, and the single prints. So it's right above M's high. 339.31. They get filled at C's low of 3. Did I say 339? I've been saying a lot of wrong prices. 349.31. Get filled at 349.98. Then we don't have anything to today's high of 351.53. And then the other ones that you should have above that I gave. For the downside, we don't have anything to today's low of 347.14. Nope, that's not true. I actually screwed up here. The first destination on the upside is the 9 wide. I apologize. 348.25. That's our first destination. So it's about 30 cents higher from where we closed. Then it's the single prints and the high. I'm sorry about that. Downside, today's low, 347.14. So we don't have anything for over 2.5. I'm sorry, 79. Oh, why am I saying $2.50? I'm losing my mind. 79.80 cents to the downside. Then below that, I'm telling you, I'm screwing up prices. We have 346.52, which was 9 wide from October 9th. 345.95 afternoon pullback low from October 9th. And then 344.89 daily low and filling the gap at 385, a 104-point gap from October 9th. Okay. So if today was just week longs getting out for Monday and Tuesday and shorts piling on, what am I looking for tomorrow? Well, I guess it kind of depends. We did end 9 wide. This certainly wasn't long-term sellers. So would I be surprised if we played around in the lower distribution tomorrow? Not at all. Would I be surprised if we played inside M's range tomorrow? Not at all. So that's why I would kind of look for tomorrow morning, barring any, again, headlines, tweets of any magnitude. And then quickly on the charts. Well, the monthly, we haven't looked at it, but here you go. We're in balance. It's a 3-month balance. We're back below August high. You'd like to stay above that, but the important one is last month's high. August high doesn't interest me that much. The all-time high last month is the big one. We're inside. Are we going to have an inside month? I don't know. I did say that early in the month. Remember I said there's a good chance for an inside month? Well, today's the 14th. So we're almost halfway through the month. And we do have an inside month. But again, we still have half the month to go. Weekly, we fill the gap, but one time framing up. So very healthy. The next destination is still the all-time high. We would like to stay above last week's high. We are for now. And then on the daily, we stopped the one-time framing up. We're in a 3-day balance. We still have 2 gaps below us. For me, this is healthy. Even if we pushed a little lower, I would have no problem for that. I would have no problem if we pushed a little lower. You would like to stay above last week's high by the end of the week, but if we pushed a little lower, say tomorrow, and even tested or even filled, well, I don't know if I'd want to fill that other gap. I wouldn't want to get that low. But if we got inside that day's range, I wouldn't have a problem with that. Make it a nice 5-day balance. And then at the end of the week, close above last week's high. There'd be nothing wrong with that. It'd actually be healthy for the market to trade sideways and then go back to bull. Markets don't go bull bear, so we went bull, balance. Now, are we going to come out of this balance back to bull, or are we going to come out of balance back to bear? That's the question that has to be answered. We basically give a webinar and a seminar every day in this trading room on the ES and SPY and how the profile is such a excellent way and a visual way to see this market. I hope you come check us out. Come join us at camelbacktrading.org. You're not going to find a better deal on the planet for $20 a month for the value you get. Have a great night, and we'll speak prior to the opening tomorrow.